Welcome, everyone. Now, could any panel be luckier than this panel to talk about currency diversification while we're here in Washington, D.C., post-Liberation Day, where we're celebrating freedom, fireworks, and liberation from the US dollar? Wait, no, that was a ChatGPT joke. But seriously, we have a fantastic panel here to talk about trends in currency diversification over the years. We have a trend given the rise of digital finance, geopolitical shifts, changing economic policies, and several indicators that you're going to hear a lot more details about today that are suggesting that the US dollar is starting to lose some of the dominance that originated going back 100 years with the creation of the Federal Reserve Bank. If you look at the percentage of trades now settling in non-US dollar, you see rising shift away from US dollar. If you look at holdings in reserve bank currencies, you see a decrease in US dollar. In 2000, 70% of reserve bank currency was USD. In 2024, that moved to 58%. And in June of this year, the IMF will put out the latest stats in reserve bank holdings. And also, if you think about the growth in regional payment networks, there are now almost 1,500 SIPS participants, direct and non-direct, over across 119 countries. Definitely dominating in Asia, but you have a rising trend of countries signing into SIPS across Africa, Mideast, and even here in North America. So we have some indicators to talk about, but first I'd like to have our panel introduce themselves and then dive right in. So starting with you, Martin.
Oh, well, thank you. Thank you very much for inviting me to participate in this panel. It's a privilege. I manage the team in Latin America for financial institutions and public sector, and the Caribbean. And I want to underline and the Caribbean because it seems like a small region. Well, it's a region with large complexity of countries, and Central America as well. So it's an interesting region to manage. Very lucky to be here today. Thank you.
Thank you. Chris?
Hi, everybody. Thank you for inviting me for the panel as well. Chris Burtch from Standard Chartered. I'm responsible for our FI sales team across the Americas, with people located across both continents. I'm going to say I was nervous with that joke. As a Canadian green card holder, my single goal of this panel is not to get deported. I love my country, but my family's in New York. So thank you for my participation.
Jakob?
So, hi, my name is Joe. My name is Joachim. Joe's a lot easier to say. I run the forwards and option book at US Bank. I'm originally Swedish, and I was afraid of being deported too. So I became an American citizen a couple of years ago. So I'm good.
So we have fantastic geographic representation here from the banks on stage. Also being from Deutsche Bank, I'm going to try and bring in the European focus as well. We'd like to start with our first Slido question. So if we could pull that up, please. How many traditional currencies will still be in use by 2075? Okay. Well, there's a resounding agreement that there still be some physical currencies left, but we have an interesting, I think, split here. So that's a good way to kick us off. So Joe, I'd like to start with you. Do you think the USD will maintain its position as the global reserve currency in the next 10 years?
I think we're starting to see a structural shift. The US needs the world to be less dollar dependent. But the US doesn't want the world to be less US influence dependent. We all realize that there's some pros and cons to being a reserve currency. Right? We borrow cheaper. It's given us power. It's given us influence. So on the downside, it's inflated our currency. It's put strains on our economy that after 50 years of having a trade deficit, we struggle to handle. And an overvalued currency makes low margin manufacturing uneconomical. With those jobs lost, you also lose the surrounding jobs in those communities. Okay? As we buy more from other countries, those countries, exporting countries to us, take the dollars and they buy US financial assets. So in other words, we take our money and we buy their depreciating assets. They take the money and they buy our appreciating assets. Not all industries are equally affected, right? So higher margin businesses like tech, healthcare, finance, you're fine. And people in those businesses tend to benefit because they own financial assets. So overall, being a reserve currency has been good for the US. But the United States is a very large, diverse country, and not all parts have benefited equally. And I think it's this hollowing out of the middle class, right? That's brought the rise of populism, it's brought the rise of the polarization we see in politics. I'm a trader, right? My world is pretty black and white, but even I realize that this is not sustainable. If we're just moving away from US exceptionalism, that means a weaker dollar. It means perhaps slightly lower equities as global asset managers rebalance their portfolios. Mm-hmm. If this were to be the shift away from US global power, that would have much more drastic consequences.
Excellent. Well, thank you for setting that stage, and particularly from your US bank perspective. Now, Martin, I'd like to shift to you. What implications do you see for the USD's global role in the event of a significant shift in global economic power dynamics?
Well, there's undoubtedly there's a big question here with the fragmentation or unification of currencies that are going to happen where the US dollar continues to be a predominant currency. I strongly believe that the US dollar will continue to be a predominant currency for many reasons. My subject matter expertise goes around Latin America, so I can explain that in Latin America, it's very unlikely to have a different currency. It's very unlikely to have a common currency across the region. We have countries when you talk about El Salvador and Nicaragua, and you talk about Peru and Colombia, and you talk about Argentina and Uruguay and Chile and Brazil and Mexico, there's completely fragmented. So all in Latin America, it's very relevant to continue having this unification of across the US dollar. So we strongly believe that that's where it stands, and it continues to be a safe haven. It continues to be a place to accommodate assets for many purposes, and the integration of the supply chain across the region and across other regions continues to be a very significant mean of security.
So still in a bit of a wait and see mode.
Yes.
Now, Chris, Standard Chartered, you're representing even a different geography. How do you see the rise of emerging market currencies such as CNY affecting the USD's global role?
I think the CNY internationalization is definitely progressing in the direction that the PBOC wants. The People's University, the Chinese People's University publishes a RMB internationalization index. And indices can be misleading because they're a computation of a number of different factors that come in. But last year they saw the index rise by 24%, which was a record measure that they've ever had. It's also, aside from the US dollar, which gained a percentage share of total payments last year, the CNY was the only currency in absolute terms that has increased the past 2 years, year over year. The US dollar gain, US dollar actually had one of the strongest years last year in terms of global payments as a percentage of overall payments. I believe it went up about 12% last year. but the CNY was up 3% the year before, 5% last year. There's a greater and greater demand for that, and it's a policy objective for the PBOC, without a doubt. CIPS, which is the Chinese International Payment System, also is a key factor in that, and that was part of the whole mandate of CIPS was to help facilitate the Belt and Road Initiative, which is the large infrastructure investments that China's making from Asia across to Europe. There's a lot more demand coming from, like we're seeing it from our clients coming to us and saying, can we use CIPS? Like, what can you guys do for us with CIPS? Standard Chartered is one of the first banks to have offshore access to CIPS through Hong Kong. There are other banks that have now joined that ranks, but it allows a much more, you're dealing with less capital controls out of Hong Kong than you are onshore. I think that's one of the challenges still that exists for true internationalization of the renminbi. So this is a step in the right direction. I think the other part, though, that's going to be challenging for the renminbi is there is US dollar. I heard this stat yesterday. 70% of US dollar notes exist outside of the US. That just, it changes the psyche of the individuals around the world when the US dollar is that stable reserve currency. It provides the stability, and particularly for emerging markets, which our bank calls home, that's critical. We've seen what happened with El Salvador when they tried to go to Bitcoin, the instability that happened there. Largely, it was interesting. It brought El Salvador on the global stage from a digital currency point of view. It did see some slight increases in tourism, but it didn't provide that stable source of value that I think the US still provides a big component of that.
It's really fascinating to watch some of the shifts towards RMB, and I encourage everyone to look. They track daily the number of participants joining CIPS, and it's quite stunning. I'd like to direct the next questions to Chris and Martin. So do you see regional shifts of USD across China and LATAM? And how do you see the role of the central banks and regulators in those shifts, if any? And I'll start with you again, Chris.
So again, I think that the PBOC this is a policy objective of China, of the Chinese government. It's clearly driving a lot of this. It's encouraging the banks, many of them state-owned, to provide more funding in renminbi. There's definitely a clear objective there to go and do that. I think that the big component of it, though, is that there still needs to be a commercial angle. And so we've recently started seeing more requests to get funding in renminbi because of the lower cost of borrowing. And so that drives the commercial element. And some of that is policy driven in terms of where the state requires the pricing of those facilities to be. There's a big opportunity there to, like, if you can, like, listen, money talks. And so the cheaper the cost of funding is in a relatively higher interest rate environment, if you look over the last 10 years, there's a big opportunity for that to become more mainstream in that regard.
Mm-hmm.
One of the challenges that Latin America is facing is there's a lot of investment flowing into Latin America from China. So there's a lot of influence depending on the sub-region that we're talking about, but there's a huge commercial trade going on. However, I do believe that, again, the interchange of the economy, whatever it is in the region, and for Asia or for Europe or to North America, will continue to be the USD. But the central banks are playing a very important role in terms of the CBDC, and that will have an impact. This is something that will be a game changer. And if we talk about unification or fragmentation of currencies, it will depend very much on how the regulator are implementing this model of CBDCs in each one of the countries. The purpose and rationale behind a CBDC in each different country has complete different elements. Across the region in LATAM, I will say that it's basically the incorporation to the financial system for the unbanked, number one. And number two, to prevent fiat coins to be created outside of the regulatory environment. We understand that the cryptocurrencies or virtual assets have created a big monster on the trading side, and the ideology of become millionaire just exchanging cryptos has created a number of traders, and the fiat coins happen to be the mean to avoid or prevent of paying taxes or being surveilled by the regulators. So that's why the regulators need to implement in a fast mode an alternative for those fiat coins, so that CBDC will happen to be the one. Now, the banking the unbanked purpose will derail, or this is the internal discussion in each country that will need to be defined. What will be the driver of implementing the CBDC, and if that's matched to other countries and other regions. So I think that this is still in the sandbox. It's still under the discussion what will be the main driver of a CBDC, but it can effectively become a game changer in the way we do commerce, in the way we unify currencies, we trade, and we see the evolution of the payment systems.
As you can see, that the trends are not something that has developed over the past several months. There is regulatory policy shifts that are driving some of these changes. It's not just geopolitical shifts, also the rise of digital finance and driving the CBDC. And I like how you talk about banking the unbanked, and how do these shifts actually help support financial inclusion? And that's something we're definitely going to talk about on this panel as well. Joe, I'd like to bring you in. Do you think we're moving towards a multipolar currency system with multiple currencies playing a significant role? And what are the benefits or pitfalls for the US dollar?
I do think, I think the Slido thing was completely right. I think there'll be, though the world is growing, but it's shrinking, there'll be fewer relevant currencies out there. But the US needs a weaker dollar. The world needs a weaker dollar. And, a too high a currency has drastic implications for some parts of the industry, manufacturing being one of them. This would have a big impact on Germany, on China, and Japan as well. But the global economy has grown so big that the US can't bear this burden alone. So we need to see a shift. Right? So what do you need to be a reserve currency? You need to have a large and stable economy. You need to have global trade relevance. You need to have an open and liquid financial market. You need to have political and military influence, and you need trust. So at the moment, as you alluded to before, the reserve mix has changed, but it's still 55 to 60% dollars. It's about 20% euros, 5% each of sterling and yen, only 3% renminbi. And this obviously, I believe, will need to change. So the US should actually promote things. So Germany announcing a 500 euro fiscal package is a great thing. Right? It's a big step in the right direction. Unfortunately, it took the Germans this act. And I also think that the US should promote countries like China opening their financial markets, because it would make it a lot easier for countries to hold reserves in something like the renminbi. So it's probably, in really broad strokes, an ideal thing would probably be 30% US, 30% euro, 30% yuan, and then 10% everything else. But I think we're going to that kind of block at the moment, where there's three big ones, and they will, I mean, this is going to take a long time in coming, but I think that shift needs to happen.
I think that the trust and stability comment that you made, Joe, is interesting, because I think that here in the US, it's hard to sometimes see news from other parts of the world or understand the perspective of other parts of the world. And when you look at the population of BRICS countries, Brazil, Russia, India, China, it's 45% of the world's population. The US, by comparison, from a number of people point of view, is significantly smaller. There is without getting at all political, the current environment in the US is one of sort of unknown. Like I've been talking to clients all week, and the one thing that everybody's saying is that nobody's really planning anything. Like forecasting this and trying to figure out what comes next it's only been 100 days, and look at everything that's happened. I think that stability that right now doesn't exist in the US is potentially going to help the other currencies. The trust factor, though, I think there's also a very widespread understanding that the US is not senior leadership of this country alone. The US is all of the people that live here, all of the people that are here, and there's still a lot of trusted relationships between other parts of the world and US buyers. There's the uncertainty around the infrastructure in this country right now. Like, and I mean by that, the global financial infrastructure, but that still is sort of that counterbalance, that stability for developing markets, that known value that greenback in your wallet is going to be worth something of value tomorrow. That trust in that currency is still critical. And I think while I think that there's a very large understated belief that the Chinese and Brazil, Russia, all those other governments, they represent an enormous part of the world, and there's trust in that allyship that's there. That counterbalances that stability, and I think those are the two driving factors that will really impact how much more strength the renminbi is going to get, how much less total value of the payment population or the global transfer population is going to be covered by USD. So it's trying to figure that one out.
Absolutely. That stability point is so vital. And, you know, while euro now is maybe 20% of Reserve Bank holdings, you are seeing, and euro is always challenged being spread across 27 countries. It's hard to get that same stability across so many territories. But because of what's happening now and Germany stepping up, and there is more unification coming around a strong Europe, which I think is leading to more movement into euro for Reserve Bank currency. Just want to try and hit some of these questions here. Have we already measured in recent months, years, significant trade and payment flows bypassing the USD and going into bilateral settlement agreements? And is this a measured trend already? And I think we probably are all seeing this in our banks, and also from what you're following in the industry, there are rising bilateral agreements, Malaysia and India signing trade agreements to settle in rupee. We've already talked about the growing CIPS dominance, but we are seeing definitely a movement towards more settlement of trade in euro. Does anyone have any observations that you're seeing?
So for our perspective, I've personally fully expected, with everything that's going on in the US right now, that our payment volumes would go down in US dollar in particular. In fact, we've seen the opposite in terms of what we're seeing. We're seeing we are seeing less US dollar transactions in and out of the US as a consequence of everything that's going on right now. But we are seeing a lot more intra-region transactions happening. So within Asia, China can't sell their goods that they manufacture domestically in China. The margins are way too short, way too small. They need to sell it somewhere. So they're looking at local markets around Asia. They're looking towards Europe to sell things there. So there is more trade happening in those markets. There's more payments happening in those markets. The other trend that we're seeing is the need for payment infrastructure. And that by payment infrastructure, I mean what each individual bank is connecting into via their correspondence or directly into their clearing networks, having that be more dynamic. Just using US dollar rails is no longer going to be able to support all of these changing trends. You need to have a payment ecosystem that is dynamic enough to change depending on what's happening in the geopolitical sphere.
Mm-hmm. You know, I really like your point, Joe, about the value in having more balance in the reserve system. I know all of us probably encourage our clients to be multi-banked, right? It's difficult when anyone is overly concentrated in one currency or even in one bank provider. I'd like to go to our next Slido question, and we're going to talk about the search for alternatives. If you had to bet on one currency to become the next global reserve, which would it be? Mm-hmm. Yep.
People talk one way.
Yep. And I think the breakout here is reinforcing this dialogue we're having, right? And our question here didn't really have a time-bound aspect to it, but definitely in the near midterm, we're seeing the US dollar staying on top. It's hard to predict anything beyond that. But look at the percentage of folks thinking about the rise of the digital euro. So Joe, do you think CBDCs will replace traditional fiat currencies in the next decade? And what role does the CBDC play in a multi-currency landscape?
Oh, without a doubt. I mean, I think it's a super interesting, if you can fix some of the things such as how do you affect monetary policy? Right? If you have a currency, should we call it like a regular fiat currency, you can change the money supply, right? You can change interest rates, you can manage, and you can think what you want of the Fed. Maybe they were too slow, but they're a super good institution, right? They have done a tremendous job over time. So if you move to a digital currency, how can you still maintain those, the ability to steer an economy? So I don't know how you fix that, but I think it's digital currency could open up so many ways. You'd be faster to payments, right? You would be much more, you could probably get away with KYC. A lot of stuff would be easier to do. AML, easier to do, right? So without that, it's like, sorry, I forgot her name who was here before. Like I said, you cannot ignore it, right? It is something that's going to happen. You got to embrace it. We just got to figure out how to best use it.
Yep, definitely a lot of use cases developing right now. Martin, what do you see as the benefits and risks of CBDCs?
Look, I'm enthusiastic about the CBDCs. I'm completely pro to see this evolve for many reasons. But let me go to the very basic. Why do we want a CBDC at a local country, at a local level? I'm not talking about the global connectivity, just at the local level. Two purposes when we talk about the unbanked. But the problem with the unbanked is that there are two reasons why the unbanked hasn't been banked. Number one, because commercial banks are not willing to pay the cost to have that reach of those communities that are so far away in emerging markets I'm talking about. And secondly, because they don't want to be banked because they don't want to pay taxes. Okay, this is one of the reasons why countries like my country in Mexico, which also I'm concerned about my passport and entering the country, 80% of the whole economy is managed in cash for any payment below the equivalent of 50 pesos, $50. Okay, so this is a very cash-driven economy. So this purpose needs to be solved with the CBDC, and the incentive for the CBDC to happen has to be very clear that needs to tackle these 2 points. We talk about AI at the earlier panel, and it's very interesting. CBDC it's bringing all these data across. So when there's political incentives for the population to have whichever support aid that will need, this will secure that these aids go to the purpose that it's intended. The data that is driven through the CBDCs is going to come with very interesting material to support future growth and evolution towards the path that we're taking. No? So I think that this is a very interesting way, and that's where I see that at a local level, that is going to be very relevant. Now we talk about the regional, sub-regional, and the global economies. CBDCs needs to be better aligned. Now, not every country is trying to reach the same because they're complete different stages on the economy, but it's intertrenched, it's interconnected, and the geopolitical game that we're currently living is going to definitely have an impact of how this is going to end. So
I think it's interesting the point you make about domestic use, regional use, and there are multi CBDCs building across the globe. But there's a good Slido question here that, and Joe, I'll direct this to you. Do you think using USD as the base for a stable coin could actually reinforce the USD status as the world's reserve currency?
And it would, wouldn't it, right? The US needs less capital inflows to kind of balance it. And it's like going to the gym and only doing like right arm curls, right? You need a much more balanced global economy. So though I think it's a good start to have a dollar-based CBDC, but I think it would be better off if other countries developed it too. Because I strongly believe that with the size of the global economy now, I like the fact that countries in regions make payments directly to themselves, right? It's a good thing for everything. So therefore, you like to see the same thing happen. It doesn't get concentrated in any one of them. Rather, it's a couple of the key ones where they develop the digital currency.
Right. It's interesting, right? You already have dominant US dollar. And then if you take a stable coin and put it on top of that, it could just be reinforcing. Yes.
I think that the stable coin, and I've spent a lot of time in San Francisco the past few months and blatantly funneling stablecoin Kool-Aid. So I'm a big buyer of the opportunity and what exists there. The fact that we've got the stables bill going through Congress, we've got the fiat sandwich concept of like fiat to stable to fiat on the other side for cross-border payments. I think there's enormous potential and use cases for banks to be looking at this and trying to bring in the stable for cross-border transactions. That's one area where I think it's particularly exciting. I've got my Circle socks on. Standard Chartered just joined, as did Deutsche. 2 weeks ago, Circle announced their Circle Payments Network, CPN, and Standard Chartered, Deutsche, Santander, SocGen, and Bank of New York are on the advisory panel for this in terms of how it works and how it should look, what are the control frameworks that have to happen. I'm very, very bullish on that space in particular. Crypto, that stability of currency, stability of value, I'm still a little bit hesitant on, but stable. And I absolutely think that it's going to drive the dominance or continue to drive the dominance of the US dollar. I think on Martin, your comment about incentives around CBDCs, that's critical. If it doesn't make commercial sense, unless you have an authoritarian government or a very large state-owned banking population within a government, within a country, that the regulator can come in and say, do this or else, I find it hard to see that the CBDCs are going to pick up in an overall use case. There has to be the right incentive scheme. In more developed markets where there's perceived more autonomy within the financial system, I think that is going to be really driven by the equivalent of CBDCs, but more in the concept of stable coins and paying attention to that. And eventually it may be they take the stablecoin technology from the private sector and deploy it into the CBDC marketplace or piggyback off ideas between those two segments.
No, I'm really glad you mentioned the Circle Payments Network. I mean, that's a really good example of how you have traditional financial institutions now working together with some of the new economy participants to move value cross-border with a stable coin. And, I'm thinking, Chris, about maybe a chicken and egg game. Do you think CBDCs are driving currency diversification or the other way around?
I think that the CBDCs are definitely an important factor for central banks around the world to think about how can we, whether it's a financial inclusion element or a globalization element or a efficiency gain that they can grab from this. I think that it's a sort of reinforcing, what's that circular reference you get in Excel? Like it's like that reinforcing one another from both sides.
And also, if here's an opportunity, change is often easier if there's a big change behind it, if something else that forces that change. If we go much more to something like a CBDC, that's a good opportunity for the world to change by diversifying the reserves. And I don't think the U.S. has been at the forefront. I'm not no expert, but I think that other countries are much more advanced and been exploring this a lot deeper than the U.S.
If I can jump in, because you mentioned earlier, Chris, about the interoperability on the payment systems. And the payment systems are completely different in one place to another. And the payment systems are going to have an impact on the CBDC creation because it's not the same where you have a country like US, you have over 500 banks, as opposed to Mexico, you have 50 banks, and countries where you have only one bank. So it will also have that impact on the creation and stability of these CBDCs creations.
So we definitely see the pie growing. And I'd like to bring up our next Slido question. Do you believe that alternative currencies and networks contribute to improving financial inclusion, or do they pose new barriers for financial inclusion? Okay. So I would have answered, yes, they improve financial inclusion. And we really wanted to have this Slido question because in our panel prep, we had a very interesting dialogue. So I'd like to start with you, Joe, because you had a very interesting view on whether this growing pie is actually good or bad for financial inclusion.
At the point that even though the world gets gross, it gets smaller, but I do think that a couple of key, it's better to have a couple of key currencies because that drives inclusion, right? As opposed to just having one. So I think this is actually positive. I think you'd be better off. There are lots of countries that are more closely aligned with somebody else, which might be more comfortable making payments in this. So I actually think that having the three main blocks, so instead of us having hundreds of different currencies, the three major blocks, and then people dealing into those. Yes, I think that will, improve financial inclusion. I think it does.
Do you see any cons?
You think that people feel like they've gotten pushed out, they're no longer part of that group, and therefore they feel they're falling out? But that wouldn't really be the small currencies, right? That would be the people who are just on the outside, like maybe a sterling, a yen, or something like that. But off the top of my head, none that I can really.
I think one element that needs to be considered is that if you're to have a dollarized economy or a pegged economy, you're effectively importing U.S. monetary policy. When rates change in the U.S., they tend to go in line with the pegged currency locally. We see this in Hong Kong all the time. You lose if you're a country like Hong Kong or a region like Hong Kong, you've got a strong local economy, you've got a strong financial sector, and the stability that the US dollar provides through the peg it helps with that trust and stability that encourages people to continue to come and bank in the region. I think that what you may lose is the flexibility that you have with interest rates with monetary policy as a policy initiative to try and help lower your borrowing costs domestically. Otherwise you're kind of susceptible to, like the US, I think they are very aware of the impact that rate changes have here in the US on the rest of the world, but do they factor in the impact on their decisions beyond like a high-level policy objective? Like, I don't think that any policymaker in the US is particularly concerned with the impact it's going to have on mortgage rates in Hong Kong when they adjust rates here. And so that I think is one of the things that would have one of the cons of having fewer currencies available. It does, to me, though, make sense. Like if you have strong fiscal alternatives to go and help influence policy and spending and drive the economy that way, I think there are other options.
Yeah, that's really interesting.
I think many of us have been invited to panels where we are the piñata of the party and we have the fintechs. So we're the ones that are talking about regulatory environment or not. To the question, I do believe that as long as there's a regulation that will encompass the level of responsibility on the regulator's front to include the non-banking with the fintechs, with all the new banks, it's good. If you don't have that, there's a big social responsibility that will have a tremendous negative impact in the economies. We see in emerging markets where neobanks are just lending money out of just giving a click to very young population that they are falling on due payments. And whenever they want to incorporate to the economic system in their country, they will not be able to be fully incorporated. When we talk about altcoins and we talk about these crypto coins, I think there's a big responsibility also that needs to be observed from a regulatory standpoint. And I think it's a race from the regulators to understand the new technologies and how this can effectively enable the progress into the economy for the population, as opposed to just using the technology without any vision of where do you want to go forward. So I do believe that they will be an effective tool to incorporate to the financial environment many unbanked, as long as the framework is there and the rules and engagement are clear for everyone and fair in terms of the play again that we have.
I think that's a really excellent way to end this panel discussion, because with all of the alternatives developing and I haven't really actually seen that level of discussion at the policy and regulator level about thinking about the impact of these changes on financial inclusion. And I think we all have the power and the ability to bring that into the dialogue, not only in how we're implementing in our own banks, but in the seats at the tables we hold with policy makers and regulators around the world. But it's definitely been, I think, a fascinating discussion in very dynamic times. And I want to thank you all for your insights. Thank you.
Thank you very much.